over to you for the rapid fire round.
Thanks a lot, Mahima, for that. We are joined in by Nilesh Jain. Good afternoon, Nilesh. It's always a pleasure to have you in our show. Nilesh, we'll start with the jewellery stocks, be it the Kalyan Jewellers, Titan. Big sell-off happened, of course, after the developments which happened overnight. But I just want to understand, do you think the technical charts are suggesting further downside moves in these stocks, or is it a good time to add something here?
Very good morning to you, good afternoon to everyone. So first of all, if you look at this particular space, so you have to be stock specific as far as Titan is concerned. I believe declines can be added as a buying opportunity if at all it falls in the range of 4,000 to 3,900. But on the other hand, counters like Kalyan Jewellers, where the setup is looking extremely negative, so not advisable to take any contra bet in this particular counter, hence avoid taking any long bets. But yes, Titan buy and decline strategy is still advisable if it falls in the range of 4,000.
Yes, and a reversal of it, of course, on these announcements is Ather Energy and Ola Electric. Of course, interestingly, Ola Electric, there has been a big sell-off from its high levels, but it is recovering for last 1 or 2 odd months on a macro data as well. Puneet had pointed that out. Just wanted to understand, out of these stocks which are both in green right now, which technical chart setup looks good?
Well, out of these two, Ather has a very strong setup on the chart, and we expect a fresh record high to continue from here towards 1,030 to 1,100. So these are the targets can be expected on the upside, keeping a stop loss below 900. Ather Energy is a buy, but not advisable to chase the momentum since it's already up more than 7%. But on the other hand, Ola Electric, merely a pullback trade can be seen towards 40 to 42 on the upside. So keeping a stop loss below 35, one can stay put in this particular counter, but don't expect any major upside.
Right, no major upside expectations coming in. But apart from this ABB India, weak set of numbers coming in, is the stock overreacting? In the stock falling in the day's trade, is there any kind of a trade for a buyout, or do you think more fall will happen? And if that happens, give me the stop losses as well.
Well, looks like kind of a structural breakdown after today's gap down opening. The stock has broken below 50 and 21 DMA. So from here, we can expect a further follow-up more on the lower side towards 6,200 to 6,000. But 6,000 is a very strong support. Near about those levels, we may see some bit of respite coming in. But at current level, I believe there could be possibility of further sell-off to continue.
Right, Nilesh, is there any alpha to be made for ONGC and Oil India? They are, of course, a beneficiary of rising crude prices. And if yes, any short-term trade possible?
Well, absolutely. Merely a pullback trade, we can say, in this particular space, where after a fall of near about 5 to 6 consecutive sessions, there could be possibility of a pullback trade in ONGC, Coal India. But Coal India, in fact, if you look at this particular stock, looks better placed. And we expect a strong pullback towards 480 to 490. So a long bet can be taken in Coal India, keeping a stop loss below 450. But apart from that, ONGC and Oil India not giving that kind of trend reversal indication as of now.
Nilesh, your views on Rain Industries. Company has come out with a strong turnaround quarter also. Do you think more sustained buying can happen at these levels?
Absolutely, a very strong chart pattern in this particular counter, a good price and volume breakout. So there are high possibility that we may see a follow-up move further on the upside towards 180 to 190 in the short run, and positionally it has a potential to move towards 210 as well. So keeping a stop loss below 145, one can go long, but not at current levels. It's already risen more than 15% in today's trading session. So buy and decline should be the strategy, and staggered way one can accumulate.
Right, that's the rapid fire segment for you. And Mahima, what's there in the Google Trends?
Right, so Sharad, let's try to focus on which stocks are trending right now in terms of where Google Trends go. Let's try to pull that up. There you go. You have counters like Swiggy on the back of its Q4 numbers. I think for Swiggy, the problem still remains in terms of visibility of profitability, at least in terms of EBITDA break-even. Contribution margin, they've said that they'll do break-even in Q1. But I think that's the one key factor that the street was kind of anticipating in terms of where the commentary comes in, but that's not coming in. That's why we're seeing a downtake. MCX is the other one in focus. Axis Bank, I think that's Tata Consumer and Kalyan Jewellers on the back of PM Modi urging not to buy gold. So all of these counters buzzing in trade on the back of that. But Nilesh, your quick view on three of these counters, in fact. Swiggy, the first one, what are the charts indicating right now? and then something like a Tata Consumer as well as Kalyan Jewellers?
Mahima, first of all, Swiggy, the broader setup is still looking weak. We have seen a continuation of a lower top and lower top formation. And in fact, if you pull up last 2-year chart, you can clearly see whatever pullback that we have got in between have been sold into. And further downside from here towards 250, 245, that cannot be ruled out. So it's a kind of a sell on rise structure. Apart from that, Tata Consumer has a very strong chart pattern. We have seen a very strong build up on the long side, technical breakout with a good volume. Attraction can be seen in today's trading session. So fresh record high we can expect in this particular counter towards 1280 to 1300 in near term. So keeping a stop loss below 1200, buy and decline should be the strategy in Tata Consumer. Kalyan Jewellers is a kind of a sell on price setup, so not advisable to take any contract. It's an avoid.
Okay, all right. So that's the view coming in on all of these consumption names. But let's shift focus to the chemical space. You know, chemical prices have corrected sharply in April after a strong run up, with most commodities seeing double-digit month-on-month decline. And Varsha, who tracks this very closely, is standing by to give us more details on the price correction and its implication on the chemical sector. Varsha, what are you picking up?
Well, thank you so much for that. So absolutely well on point that chemical prices have